Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking CarMax. Stock's down 2% so far this year. It seems like, Andy, we've talked about these used car retailers, CarMax, for years. Carvana really starting to get some good sentiment data from what I remember for the last couple of times we talked about that one. It seems like these two companies have flip-flopped their popularity over the last year or 2 years. Is that what you guys are seeing in the data? Because CarMax has been severely underperforming.
Yeah, absolutely. I think the big conclusion here is that Carvana is simply a better company than CarMax. If you look at every metric, CarMax's profitability isn't the only thing being squeezed. Their total units sold was down 3%. Their average selling price was down 3%. Their gross profit per unit actually fell 1%. All the while, Carvana is absolutely dominating and growing their gross profit per unit and their number of units sold to levels that are, 2-3 times what CarMax can do from a profitability perspective. And so it's clear that Carvana is just the better run company. It has the better strategy and is executing better. And consumers are going that route as well. Carvana web visits have overtaken CarMax. The consumer happiness levels for Carvana shoppers is significantly higher than CarMax. And so it's kind of this, it's kind of a bludgeoning in terms of the competitive landscape, because not only is Carvana, winning the customer over and providing a better experience, but they're making more money while they do it than CarMax. And so it's really hard to see how this turns around for CarMax, because yes, interest rates falling can be a tailwind that used to be a headwind for both of these companies. But, Carvana was slicing through those headwinds like a knife, and CarMax is just hoping things turn around so that they can get a little bit of buoyancy. And I think the difference between the two is just absolutely shocking at this point. We're really, as you can tell, I'm just really down on CarMax. I think that they blew a generational opportunity to be a leader, and they gave it away, and Carvana stepped up and took it.
Yeah, it's interesting, Andy. Carvana seems to be either just better than them or doing something differently, because AutoNation, car sales down 5.6%, more comparable to CarMax than, say, a Carvana. So I guess the question is, what do you think they're doing differently? It appears these companies are all in the same business. Is one doing something different, or which is probably much more likely? And it goes back to your point, Carvana is just better, and it's doing all these things better than these other, because frankly, in the CPI data, used car prices are coming down.
Yeah, it's almost like if we rewind the clock and you ask me, what's the difference between Netflix and Blockbuster? Is Netflix just better? And the answer is yes. They have embraced, CarMax has not embraced the technologies that Carvana has. They have, just in a almost meaningless way. Carvana's gone all in on the technology and efficiencies that they're able to produce, and it shows in the data, and you can't argue with the data. Carvana had a $7,000 profit per unit versus CarMax at $2,300. What that tells me is that when things do get somewhat competitive, Carvana is going to have significantly more wiggle room on both the price that they purchase cars and the price that they sell cars to the end consumer, so that eventually they should win every single deal. And I think that's the omen that's kind of hanging over this market in terms of Carvana's dominance over CarMax and quite frankly, all of its competitors.
Yeah, that first chart that you had, Andy, on gross profit per unit on Carvana, and that continues to rise, by the way.
Yes.
That is astronomical compared to CarMax. I mean, CarMax has locations around the country, around big metropolitan areas, but Carvana's got a few too. I'm just like, I'm looking at that data and just going, it blows my mind a little bit, where I don't know how they're doing it, but they're doing it, and they're doing something right.
Yeah, it's one of those charts where you look at and you think, well, either Carvana is going to win and dominate this industry, or Carvana is lying about their numbers, because there's almost no middle ground. I don't think that they're lying about their numbers. I think that everything that we see from a consumer experience standpoint, sales volumes, growth, et cetera, it all points in the same direction, and that is Carvana's the winner in this space.
It's almost like, Tom, to give a correlation, it's almost like when AMD started to just beat Intel on a quarterly basis,
yes.
and you step back and go, is this really happening?
Right.
Is this one count? Are they just that much better? And at the end of the day, the answer was yes, they are. That just much better. It feels like a similar comparison here.
Yeah. And Andy, when you look at this stock, as I mentioned, down about 2% so far this year, far off of those all-time highs, and you broaden out a 3-year chart here in CarMax, it reflects that nearly 156. We're trading $75. So the bar's low going into this one. What's your earnings score on this?
Yeah, the bar's low. I think CarMax can get under that bar. Unfortunately, I think we're going to have a negative reaction to this. I think we'll have a negative outlook. I'm extremely interested in hearing, what I hope are some very pointed questions from analysts on that comparison directly to Carvana, because I think that's the main, that is the main thing here. It's not interest rates. It's not the used car market. It's how you're doing versus this competitor that, by all accounts, is eating your lunch day in and day out.
Yep. All right. Great stuff. As always, Andy, appreciate it. Have a good day.